Welcome to the Transparent FX Academy. In this video, I'll speak about GBPUSD. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly demand and support area. In fact, from here, all these previous rejections to the upside were created. Every time the market tested this zone, it rejected it to the upside quite aggressively. And what we can notice at the moment is that we just had yet another test of this exact same level and the start of this rejection to the upside. So on the monthly time frame, everything is looking quite bullish, and there's good probability of seeing more continuation to the upside and more institutional buying. And again, I will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is rejecting this level to the upside, and let's focus on the most recent price action. Now, if we look at it more closely, the most recent price action, we can notice how the market is currently testing the previous level of monthly supply and resistance from which this rejection to the downside was created, which is now turned here support and demand. So there is a good probability as the market is testing previous resistance turn support to see here more bullish continuation being created, which would also complete this monthly impulse correction and impulse pattern to the upside. So here in the monthly, everything looks quite bullish. Let's keep that in mind and drop down on the weekly time frame. Now, from a weekly perspective, this is where things start getting a bit choppy, because what we can notice here is that the market at the moment seems to be quite undecisive about the next direction. If we look at the current price action, we can easily notice how now the market has created first this lower high, but at the same time, it is creating a higher low here. So when you're seeing lower highs and higher lows at the same time, usually a wedge formation is forming, and at some point you do expect a breakout, either to the upside or to the downside. Usually a market that has not really chosen a direction yet tends to move in a wedge formation, so essentially to converge and consolidate. Until then, you do see a breakout either to the upside or to the downside. So on the weekly, the situation is unclear, and a wedge pattern is clearly a pattern that usually is created when there is no direction on that specific time frame. Dropping down on the daily, what do we see? Now here in the daily, this is where the structure becomes very clear. We have this level here, which is the important zone that we have to look at. This area, which was the previous resistance here from which this rejection to the downside was created, is currently still acting as resistance. Now, until the market will remain below this level, it can easily continue lower. However, where things would get interesting is if we see a breakout to the upside, because at that point, if we do see a breakout to the upside, the daily time frame would be aligned with the monthly time frame. And if institutions are longing this market, at that point, after the break on the retest of the previous resistance turn support, that is where there is good probability of seeing more institutional longing, further increasing the probabilities of a potential rejection to the upside away from this level. So let's go and see what is going on when it comes to the institutional side of the market. Well, if we're looking at the data for the GBP, we have to keep in mind that we are already looking at GBPUSD, because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went from minus 33.6k net positions up to minus 1.9k net positions. First with 21,000 shorts closed with the previous report and 5,900 longs getting added. Then another 900 shorts closed just with the last report and another 3,700 longs getting added. So it is clear that institutions are closing shorts, thousands of shorts, and opening thousands of longs on the GBP, therefore on the GBPUSD, with longs being increased from 65k all the way up to 84k from an institutional perspective, and closed shorts from 112k all the way down to 86k. So it's clear that they're moving back to the bullish side for this market. So let's keep that in mind and move back to the chart. By the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description so you never miss new updates. Now back to the analysis. So here on the daily, if the market will break above this level, that is where things get interesting, because until the market will remain below this resistance, it can and it actually should continue lower, because until the market remains below resistance, it should be rejected to the downside. But if we get the break above, that is where all the different time frames and the COT data start to align in the same direction, creating better probabilities. So if we do see this break and retest, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.